Hello guys, welcome to the Trading Parrot. Today, in just a few minutes, we're gonna get the unemployment rates finally. The expectations are for them to settle around the same value. But at the same time, we can see how we closed on the market yesterday on the S&P and Nasdaq, both correcting. We could attribute that to potential incoming unemployment bad news, but at the same time, the expectations of a rate cut in December has dropped from 90% initially, then to 70 something, and now is below 70% with a 31% chances of no change. Guys, in this general markets video, I'm gonna do TA. I'm gonna look into some socials and some opinions. In my TA, I'm gonna include the 10-year yield on the US, dollar, gold, and Magnificent 7 as well. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. And can we get 1,000 likes on a Friday? That will be fantastic. If you're looking to trade general markets, one excellent broker is VT Markets. This is the one I'm currently using, and it makes it extremely easy to transfer from your exchange on crypto, USDT or USDC, straight into the broker and start trading general markets. You can use the link in the description and get 100% welcome bonus. So let me look at Polymarket and see what are the odds at the moment of a rate cut. 25 basis points is sitting at 70%, in line more or less with the Fed Watch tool at 68.9. So no major difference. And today is Friday, so we have a new reading of the Federal Reserve balance sheet. It hasn't come down this particular week. It's just steadily hovering around the $2.85 trillion. We have already previous week broken down below the extension of 1, threatening to go into the 161A, which is a lower low relative to what we did in 2023. A reminder that whatever the Federal does with the balance sheet is pretty much mimic letter by general markets, and of course, yes, Bitcoin. You can see here the chart of Bitcoin, and every time that the balance sheet gets thinner, you go sideways or bearish, and that is not the exception with the top in 2021. As soon as they started cutting the balance sheet in here consistently, that is the top of the market. Indeed, Bitcoin peaked slightly before the last push up of the balance sheet. The M2, yeah, same thing. It went up while we were topping, so that didn't save either the top on BTC. But this is a general market, so we're gonna look into what's going on in here. Where should we put our eyes at the moment according to Perplexity? Perplexity, in my opinion, is a lot better for finance, for researching, for real-time data than ChatGPT. And what do we have in here? What is the most important thing in the past 24 hours, and what impacts risk on assets like Bitcoin the most? The federal rate cut odds, that December cut probability that dropped from 90% now sitting around the 60 with 31% of no change. That definitely reduces the certainty of December easing weights on risk assets. The 10-year yield rose to 4.17% on November 5th, near 1 month high. Higher years reduced the BTC appeal versus safe bonds. We also saw the dollar hitting above 100. We have to look at that chart as well to see if it's gonna continue in the breakout trajectory where we currently were in the middle of the week. The jobless claims rose to 228,000, week ending in November 1st from 219K. So that is an increase, small, that puts it in neutral, but we'll see what we get this week. The government data blackout, BLS halt, jobs, CPI, PPI releases, shutdown enters month 2. Uncertainty clouds the Fed decision making and reduces clarity. The market really wants to know where are we going from here. That rate cut probability on the Fed Watch tool on Polymarket is constantly fluctuating with all this blackout, speculation, and alternative sources for employment rate, for example. And that puts this at a 3 out of 10 for risk on assets at the moment. Of course, the moment we get certainty, depending what is that certainty, things could completely flip. US-China trade truce. that reduces the trade friction and lowers the global macro tail risk. This short term is alleviating, but long term I have quite a negative view on the relation between China and US. I think China is pushing towards taking over on different aspects. It's clear how they are progressing in that direction instead of actually pushing back in US and being able to take more. I even see this pushback on the tariffs as US saying, fair enough, we cannot push more with the tariffs. This could get too ugly too, so they cool down in that sense, and that's giving this short-term relief. The oil rose to $63.93, up 0.86% day on day. The energy cost rebound signals inflation risk, but supports BTC hedge. So that's a 6 out of 10. And as I was expecting, as we ran out of stocks that can pump during the earnings season, which we saw plenty of them, as soon as we ran out of those bullets, we started with the risk of sentiment pressures, all speculative assets, including BTC, now being in the red. The S&P 500 fell 0.9%, the Nasdaq 144. This is how we closed yesterday. JPM and Berkshire are all up. And yet Michael Burry was taking a big short, and that called a lot of attention, not just attention, but overreaction as well. And I remind you that this dude is the guy from the Big Short movie. He took a massive short in 2008 against the housing bubble, and he got it right. But after that, he has had a long streak of losses, of calling for deeper corrections when there is already a correction and then it doesn't happen. So there is kind of a view out there that he's going to call it wrong. But still, with this market, he short specifically AI, Palantir, and Nvidia. And there was maybe a coincidence, but the market actually started correcting from there. It could be more than a coincidence. It could be a reaction to his play as well. I'm focused on one key crash indicator right now, the VIX 20. And we're going to look into this once we get into the charts. The S&P could correct. Of course, they are doing the opposite thing. This measures volatility and the S&P measures the performance. And I want specifically to look at the monthly. I want to look at the big picture in here. These cycles, for example, the top of 2017, the top of 2021, and then this potential top information that we are currently in that was threatening now to break below 4.8, and then they got bought up in the middle of April and it put a new high. This high in here is an equal high, slightly higher relative to that high on the monthly. So we really cannot say that this is a strong bearish divergence, specifically talking about this peak on the monthly on the S&P. If we go on the Nasdaq, we also have a higher high on the momentum and on the price. So it's neither a bearish divergence, but from other oscillators, it's calling for bearish divergences. The Hive aggregates multiple oscillators, like tens of them, and it gives a signal once you pass a threshold of number of bearish divergences coming from different indicators. But clearly the RSI didn't put one, maybe some other ones like CCI, MFI, or who knows. We were talking about this rally into a revenge in here thanks to this breakdown, and we have managed to get into 78, but not really to pinch that line because that will set us into around 85 from here. We don't need really for a revenge rally to actually test that level to still say that it was a revenge rally. For example, in this breakdown in here, the RSI just goes there and then it dumps. In here, it could get to a higher high and then dump, or maybe do a little bit more of rally because there's some room to go from 78 into maybe 85. Currently, the 21 weekly is sitting at 20,000 on the Nasdaq, and on the S&P is sitting at 588. So there is a lot of room now to come back and test previous resistance. That was 606. Let's go to the weekly where we can see a little bit more of the magnificence of this rejection. We have another red candle in there right after this one there, and you can see how things are intensifying. Every now and then there is some profit taking, and I can see that every now and then we get a larger red candle. On the weekly, we already have another hive on the S&P, not on the Nasdaq, but this is a red engulfing candle on the weekly, which now is finally joining forces with the gold. Remember, we had a top on gold, on silver, then we were saying in the previous video about general markets, which is this one 2 days ago. Is S&P 500 next? Gold already topped. Now potentially we could see that top forming that follows the order of the events as we should be expecting. After all, we are getting on the Nasdaq to very elevated levels of RSI. The highest we've been in this range is been 77, and we already went into around 74. On the S&P, we did this rally revenge of the momentum, and we visit almost the 74. As high as we got, how much is that? 71. So if we start now correcting, what are the areas that I'm looking for? I'm looking for the 21 weekly, that 6.5 aroundish. It's a moving target, and on the Nasdaq is 23.871 as we record. You can see how the momentum corrected big in here. Of course, this could get bought up by the end of Friday, but if not, if employment disappoints, this could also accelerate too. Let's look at the liquidity before we go into other tweets. This is the S&P and the usual liquidity pools that we haven't managed yet to hit. The 707 and the 725 are reasons to stay around here and to only form a bull flag and do continuation. But if market decides that this is the day to do the puke, then we have these levels to the downside. Big levels are 606 and then 536. But if we really want to go for a carnage and then a lower low relative to this correction, we have everything below 481 on the S&P. On the Nasdaq, you can consider that all the liquidity on the upper end, the most intense one, has already been taken up until 640. Then we have some at 669, but this is nothing compared to what we already took. This could mean that we could leave that on the table and start correcting into 543, first pulls, small ones, and the largest one is this one at 400, located at the low relative to this correction, the one from April 2025. Let's have a look at those indices, the dollar and the US 10-year yield. This week at some point we hit the 57, so literally we hit the target of the revenge rally on the weekly for the dollar. We broke out from this resistance, we were over $100, now we are getting pushed back down because that is a resistance. So some reaction we have to have. We cannot just go straight into targets of 105. We need to respect it. The target of this double bottom, the technical one, is 101.5, which we haven't managed to complete yet. If we get in there, then we can talk about 105. Now, this rejection could well be final. Maybe this revenge rally is done, and maybe we could lose the multi-year support. So watch out for that risk, because we just made a huge milestone. Momentum moved from 29 into 58 on the dollar, and we call that from July, from the lows in here when we were at around $96. So that is succeeded now. Pushing for higher is something that you can do trailing, but you cannot start along in here because we just hit weekly resistance. The VIX probably is starting to re-accelerate in here, but it still cannot conquer above 25. That is the line in the sand to say, yeah, we are getting now a massive correction. We've been above it, but we get rejected back below 24. Every time we do that, there is a cool down. It's like saying false alarm, but we already have two alarms that were big alarms, proportional to COVID-like kind of alarm. And if we close above 25, things could accelerate and we could get an actual market crash on general markets. Talking about 5% of more, maybe even at 10%. I don't want to time AI bubble. I think eventually it's gonna pop. But, you know, I feel quite responsible, and I don't want to be calling for this kind of things because it's almost impossible. The Nikkei could be popping, by the way. You can see in here that we get another breakdown. There's been plenty of them, plenty of fake outs, all the range, but we have already reached 81. And with the higher and higher you get with the RSI, the likelihood that it's a fake out diminishes, right? And we put a higher high here, 81 relative to 80. So this has way more chances to break down than any breakdown that we experience here that turned into a fake out. That could intensify if we put a bearish engulfing candle on the weekly on the Nikkei. Now let's go back to US. Let's go to the US 10-year yield. We have a move in here of 5% to the upside, and we bounce from around support. Remember that we bounce from 3.9 and we bounce again from 3.9 in here. We are not yet testing my support line in there, but on the weekly we have this potential breakout incoming. On the weekly we have this low quality setup. We have a double bottom, we have resistance at 44, and if you are already holding the asset after reclaiming this trend line in here, that could be a bullish indication that if we follow up with a breakout in here, we can go into the next resistance of 56 on the weekly. That 56 is in the price located around 4.3%. I can also see the neckline in here of a double bottom at 4168, and then the target is 43. So in line, the technical target with aroundish what the RSI is also saying that we could accelerate into the upside from here. That together with the dollar potentially continue into the upside. If we do both together, they can put double pressure on risk on assets. The top 1% of US earners now have more wealth than the entire middle class, and that is a signal long term for something to fail. Every time that you have too much wealth concentrated in a small group, that is not good for a society. It's kind of a cancer that once it starts breaking that society in a way that is irreversible. So ideally this needs to be reversed so the whole society as a whole can bring the whole country back up. But if you accelerate this thing, is a point of no return. That is not an opinion, that is just history. Just go to YouTube and ask for history. How do different empires and kingdoms have done once that happens? Does it go really well or not? You can start with Roma, you can start Roman Empire, French Empire, Spanish, Ottomans, whatever. Pick any and you're gonna get the same answer. Container shifting traffic from China to the US is in free fall. The cargo vessel count from China to the US has dropped to 41, the lowest since February 2024. The number of large cargo ships has declined 42%. And this means, that there are still tensions. Maybe we got into a settlement around the tariffs, but there is an ongoing breakup in relationships. And this covers not just imports, exports, but also different aspects. Like, for example, NVIDIA, we don't want your chips. We just want Chinese things produced right here. Speaking of which, China smashes the world record for world's fastest quantum computer. Oh, no, don't worry about quantum computers. Mariano, you're crazy to think about that. And why AI matters for the death of Bitcoin, why AI matters for causing drama in the economy globally. Because quantum computer is tech, and AI speeds up development of tech. Think about tech now running on steroids thanks to AI. My summary of the Bitcoin intelligence that looks into all YouTube things was built by AI. I will have never been able to implement that in my spare time in just a few hours per day without, having to code. AI is coding those things. And if you think about quantum computers, they require actually AI to speed up that development. Now that we have AI, quantum computers are going to develop at 10 times the speed, and not just quantum computers, everything. So whatever is about to happen is going to happen faster, my friends. US job cuts are skyrocketing. US firms announced 154,000 job cuts. And this is something that is about to hit the news. Is 1:15. In 15 minutes, we're going to get the unemployment, whatever metrics out, and that is going to impact the markets. Bitcoin is trading above 100K, but every minute it goes below, above, below, and the Nasdaq and then S&P are overreacting as well. And I think the only way this is not going to crash the markets is if they fake those reports, which is always an option, of course. At this level of layoffs in 2009, stocks were down minus 50%. Currently, stocks are 35% off the April lows and still near all-time highs. The level of overconfident buffoonery, I don't know how to pronounce that, I'm sorry, is epic right now. US consumers are defaulting at a crisis pace. Student loans serious 90 plus days. Delinquencies exploded to 14% in Q3, the highest on record. Auto loan delinquencies rose to 3%, the highest since 2010. Credit card 7 on 1, wow, the highest in 14 years. So all of these defaults call for something to break. When something breaks, the Fed needs to cut rates massively. But the reading changes. It's no longer, oh, look at that, the Fed is going to cut 50 basis points. That's amazing. Some of them are going to think that, but the smart money is going to think, oh, wow, something broke. Hold on a minute. Am I on cash or not? No, we need to run to cash urgently. And guess what? Warren Buffett has been doing that only. The Nasdaq gap closed major support in play, expecting a bounce higher to close the gap in the short term. A breach of the blue line and the bulls are in trouble. High probability of gap closing higher. So on the Nasdaq, we have that gap at 630. We could come to close just that gap, and that wouldn't necessarily guarantee that we are going for this liquidity here. That liquidity is less attractive than this fake out that we did in here. We have a massive red candle engulfing, and we went for the shorts. Now we have taken the shorts in the Nasdaq, and to repeat that setup, price needs to go into this that is less attractive than before. But this time, people that took this trade want to take the same trade, and it could be the case that it gets overcrowded and it closes the gap and then it comes down. That is just a setup, just speculative. I'm just thinking, but hey, you are here to know what I think. And that's what I think that I would like to protect myself against. It might not play out because I don't have really many crystal balls in here. Anyways, I hope you enjoyed this video. Thanks for watching until the end. Hit the like, subscribe, and write down a comment down below. That helps these videos to make more than just 100 views, which is always appreciated. Enjoy your weekend, and I'll see you in the next one.